Good afternoon. This is John from the Vantage Markets Private Client Group, and here's your midweek market update. It's currently 11:59 on the 18th of Feb, and so far this week markets have been trading largely range bound. Just looking at the S&P here, we can see that we have had some attempts for prices to move up, but they seem to be quickly sold off. And looking at market structure, we've seen the previous resistance just at 68.80 being respected. However, that most recent support around the 6800s has been broken, and be pretty key to see if we do get a change in market structure from here or a future direction. Looking ahead at the economic calendar, we can see we have some Aussie employment data coming out tomorrow. They're expecting for an increase of 25,000 jobs, so a drop from last month's number, and they're expecting for the unemployment rate to increase to 4.2. The Aussie dollar's had some pretty significant upside over the past few weeks compared to a lot of the other economies. We can see that just looking at the higher time from here on the weekly, after breaking above 2024's yearly high at 69 cents, we have seen a pretty straight push up to 71 cents. And this data coming out weaker than expected could change expectations for how quickly or how the expectations of when the next rate hike might be. They are still expecting for a hike, but when that comes, if it's April or May, is not 100% certain yet. And if we do see this week that the data comes out weaker than expected, and we get a new a break below yesterday's low, there should be an argument to be made that we might see a potential pullback down to 69. However, the higher time frame trend should remain the same, and we might see a retest back up towards 70 cents, 71 cents um, going forwards. So looking ahead at what we have coming out on Friday, we will have GDP data coming out from the US, as well as their preferred inflation reading, the PCE. So they're expecting for PCE to come out at 0.2%, and the GDP data is expected to show a strong growth as well for the quarter. So any significant misses on this data might lead to some volatility in the charts. So this data could show that a strong GDP figure being a sign of growth and potential for the US to pause their rate cuts. However, a weaker PCE print might give signals for rate cut expectations. So markets will be potentially volatile on this data release. Just looking at gold here, we can see that this week we have seen a break below that most recent support at 4,900. So going forwards, we could see a pushback down if we break yesterday's low towards the 4,800 level. However, if we do break back above that most recent support, there's an argument to be made that we might see a push up towards 5,000 or even breaking above there to continue up towards 5,100. So as always, this is just a general overview and should not be considered as personal financial advice. Thanks for your time, and as always, trade safe.